A regulatory filing quietly resubmitted this week could reshape how investors gain exposure to one of the largest cryptocurrencies by market cap. The move reignites a high-stakes question. Can BNB break past key resistance and sustain momentum toward $1,000, or will regulatory friction stall the rally? What changed isn't just price action, it's institutional positioning. Grayscale has filed a second amendment to its S1 registration for a spot BNB ETF, signaling continued pursuit of a regulated investment vehicle tied directly to Binance's native token. This isn't speculative interest, it's structured, deliberate, and designed to meet SEC scrutiny. The update follows the landmark approval of spot Bitcoin and Ethereum ETFs in 2024, which opened the floodgates for mainstream crypto adoption through traditional financial channels. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. But BNB faces a different path. The SEC's past legal actions involving Binance add complexity to the review process, making the BNB ETF a test case for whether regulators will extend the same access to tokens linked to exchanges under prior scrutiny. This latest amendment is not a formality. It's a targeted effort to address core SEC concerns: custody protocols, market surveillance, and manipulation safeguards. These are the same hurdles that delayed other crypto ETFs, and clearing them would be a significant step toward approval. A spot BNB ETF would allow institutional and retail investors to gain exposure without holding the asset directly, potentially increasing liquidity and broadening demand. But approval is not guaranteed. The filing remains under active review, and the SEC has not signaled a timeline. Still, the mere persistence of Grayscale's effort adds credibility and keeps institutional interest anchored in the narrative. Meanwhile, BNB price has climbed back towards $687, testing the $690 neckline, a level that has acted as both resistance and a psychological barrier. The $690 level is a make-or-break zone. A failure to sustain above it could trigger a retest of $650, then $627, or even $600, levels that previously attracted buyers but could weaken the bullish case if breached. The long-term chart shared by analyst Crypto Patel frames the $500-300 range as a high-demand accumulation zone, not a breakdown signal. That view is supported by BNB's historical resilience. Down 83% in 2018, 83% in 2020, and 73% in 2022, yet still up roughly 169,100% since its 2017 listing. Those extremes suggest deep-pocketed accumulation at lower levels, which may act as a floor. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal to watch is not just price breaking $690, but whether the SEC acknowledges or responds to Grayscale's second amendment. That would confirm the process is moving forward. Until then, traders are navigating a dual narrative: technical strength on the charts and regulatory ambiguity in the background. The breakout attempt isn't just about price, it's about whether BNB can transition from exchange-native asset to widely accessible financial product. The answer may come not from the markets, but from a filing desk in Washington,